Good morning, everybody. Jolts is at 10. And the schedule for everything's all messed up today. QRA is out. ADP is out so far. I think we got the mortgage purchase index. Mortgage rates are up again. We also have manufacturing PMIs at 9:45 and 10 o'clock. Looks like SPX is going to be opening, right around just under 50.30. So a little bit down from where it is now. Might drop some more into open. Or at least, yeah, yes, might. Ding ding. VIX is up overnight. The QRA was a big nothing burger. Just more short duration issuance. Some buyback to try to keep yields from bouncing all over the place, but not a huge buyback program. I think like 2 billion a week or something like that. I doubt they'll even be able to keep up with it. Good morning, Dork. How's the goon going? It's cathartic. Christ, puts are expensive. Yep. Yep. So are calls, probably. Yeah. Yeah. Today is not the day for options. Unfortunately. You're not the day for options. Sick burn. On a deal like this, with options pricing what it is, would you still scalp or day trade or trade cheaper indexes? Might trade futures? No. There's no risk premium priced in. Well, not a lot of risk premium priced in. I could reach out to CME and see if they would offer that CMO. Fill the gap. Let's test 49.80. Huh. I assume you mean like the longer term gap. NQ still looks weak. Well, no, we filled that one yesterday. Have to go further back to find. I think there's one here, but maybe on a lower time frame. 15-minute. No, no gap down there. Or do you just mean the upside gap? Probably could. God damn it. Let's see. Yeah, I don't think we're going to get enough momentum to dig out of this. The range we're in right now is fairly stable, at least between 50-25 and 50-40, 50-60. Did you see ADP employment for last month got revised up? So this month didn't look so bad. No, but I mean, no one really gives a shit about ADP employment, to be honest. My first out of the day was hot girls delivering food. Uber Sleuts is a thing now. Not that I'm aware of. Maybe it's part of their premium membership. Is GoEV finna squart? That'd be cool. I would enjoy that, I think. Yes, got rejected at 5063 in the 15-minute. Probably get a continuation of the downtrend here. Bear flag already broke. The overnight bear flag already broke down. We bounced back a little. We'll be looking to like 50-50 for support. So still not a lot of range on the drop. Vol's turning up a little bit. GoEV borrow rate on my shares is 135%. Yeah, it's quite high. Failing. You're gonna lose 50-24. Alright. Let's see how this looks. That's kind of bearish. Delta's still super fucking negative. Manufacturing reports are right now. Or S&P manufacturing is right now. Yeah, IS, which is slightly up. We got 15 minutes till ISM and Jolts. Oops. Using 25 is pretty bearish. Could move down to 50-15. Downside moves here is bad because we can get sucked into all the open interest down at 5,000. Not a lot of support. Jolts is also at 10 a.m. NQ, I don't feel so good. NQ's having a bit of a rough morning. Give me 1 second. We hit 49.50 after FOMC. It's not impossible. I would say it's definitely within our current range. ISM is expected to come in cool. And Jolts is expected to be down, which is fucking stupid. Just 54. Mm. Yeah, this looks like it needs to lose 50. Nah, there's support at like 50, 45, so. I'm not sure that'd be the best outcome. It's like the vol short's gearing up a bit. Bulls are trying to leverage this up. That's how, well, yeah, at least a little. It's gonna be funny if they fail again. Can we get to 5K before JPOW? We could, yeah. Because any directional move from Jules just increase the chance of a reversion off of FOMC. I mean, we don't know what's going to be said at the FOMC meeting. Pretty sure raising rates would be more bearish than nothing. Sure. Interesting. Hmm. JPOW's going to say inflation is coming down, but we still have work to do. Maybe. Ooh, interesting. Support got stuffed. Weird consolidation. We're data dependent. Why 2026 go EV leaps and not 2025? Cost to carry in Vega. Wouldn't it be cool if Kashkari did the Q&A instead of Powell? That'd be weird. Hmm. You bled into the short position there. I don't like that. Oh, I'm just gonna wait. See what the decision is. Bullish outcome from the meeting today. If they announce plans to reduce QT, that can be considered like a little dovish. It's also kind of expected, though. It would be cool if the MM was long Vana as JPOW takes the stage. Well, if we fall below 5,000, maybe. Dad, bulls suck. Yeah, they do. Hmm. Start of a reversal. Shorting vol a little. No. Still very choppy. Looks like Apple in their targeted pump to try and slow this descent today. ISM contracted 49.2. Jolts 8.48. So that's a weird reaction to cooler labor data. Manufacturing employment, manufacturing prices. Holy fuck. That's awkward. Manufacturing prices are not good. 60.99 versus the consensus estimate of 55. Jolts came in softer though. That was good. 8.488 million. And PMI's cooled, so I don't know how the market's going to react to that, but that's a lot of inflation. Bit of a mixed reaction there, yeah. Is that why my Chobani Greek yogurt was $5.99 and now it's $8.24? Sure. Sounds like cuts are back on the table. Are they? I don't think so. Rising inflation, slower growth is not a time for rate cuts. Cuts weren't ever on the table. Also true. For one yogurt, $8? I'm assuming it's a tub. Yeah, I don't think it's an individual yogurt. I did it. I finally made a huge sale at work. Over 0.5 mil. I'm the first technician to get a commission check at work. I can get the good groceries now. Nice. My morning coffee now costs $47. So the data was bullish leaning since we just ignore inflation. It's the combination of lower growth and higher inflation that's the reason we're not back at 50-50 right now. Siggies are bomb. Nice. Wait, did I tell you about those? 500 watching, 100 likes. Most of the people don't like being here. That's how they let me know. Kerrygold butter instead of salted grease stick. Kerrygold's okay. There's better butter. That's like what poor people think rich people butter is. You have to get hand paddled French butter. I still don't check the price of my groceries. I just say, put it on my card. Like being here. That's fun. Oh, sorry. I've had the cultured butter. It's, I can no longer like your stream. It saves it to my saved list on YouTube, and my wife will know I'm trading. Really? Hand paddled. We ain't here to kink shame. I don't want to shame the French more than they already have been. Imperial? I don't know which one that is. Is it paddled by an authentic French milkmaiden? I don't know. I assume it's paddled by old, partially drunk French guys. At least the only video I've seen of the French butter making process involved a room full of rather portly fellows, all of who looked like they were hungover or still drunk, just paddling butter. It slapped with two unskippable ads. What did you do? I think it was actually on how it's made. How are you people seeing ads? Just use an ad blocker. Yeah, fuck me. Churning butter once or twice. Living in an Amish paradise. Nice. Weird Al. The 600Ps on HubSpot have printed 70%, and I'm considering taking profits, but there's so much juice. Could I perhaps get a little masterful guidance? It's awkward. That was a pretty hard rejection. Why the fuck is ES so bad at this? Come on, bulls. Yeah, I'll look at HubSpot. I don't know what kind of guidance I can give you. It looks like it's fucking going down. It's at support right now. If it breaks down from here, 78 is the next support to the downside. After which, there's basically nothing till like 50-50. Fuck the Bulls. Morvana. I mean, they're trying to turn this around, but it's not very successful. I'm not even sure momentum swinging their way is gonna help this. Hmm. 5115 support seems unlikely. Alright, I might get a little bit of downside continuation. Delta's falling off again. Bears killing the Bulls? They need to play dead. Yeah. It's a bit rough. I mean, there's just plenty of puts. Puts pretty much all the way down to 5,000, and quite a lot of them, too. $50.45 and $50.40 could offer a little support on the future side, but probably not much. Bluebee's pulling back. Futures is still pretty volatile. Another failed vol short. Yeah, I think if we get rejected here, we break 15. Possibly neutral positioning coming in for this afternoon. We're bound to get some of that. I think we already have quite a bit. It's just there's also a lot of puts. Like, there's plenty of calls to the upside of 50-50. It looks like 50-45, 50-35. Yeah. Might have seen a bit of strangling into close. Hmm. Feuds aren't ripping. Oh, rejected. Can you see GoEV tips? You don't even know what the fuck they mean. Sure. There you go. Could things be worse than we think? Ah. Maybe. Are heart palpitations good for trading? It depends. Are they? Is your heart palpitating in sync with the ticks? You need to figure out what time frame your heart's on. Can you show me your tips? Absolutely, Nick. Why would the government tell the truth? They haven't. That's the secret. The 1 second. What GoEV contract am I going to over leverage into, lose 50%, and then sell too early into the run to only make 5%? I don't know. Which one have you been looking at? Tips in bio. I can't believe we keep testing. That's ridiculous. Just fucking fail already. How are there not more sellers to the downside of 50-50? I gotta lift the book. Actual garbage. Hmm. NQ support 17,450. So if ES fails here, the next stop to the downside's like 50.23. QQQ looks weak too. Why am I looking at that? There. Hmm. Now I need to lose 49.95 for Vana. What's it turning up? Could we get some new member badges for longer than 12 months? Possibly. You want me to change them? Mix it up? Any new positioning forming, or are the strangles holding us like a nice tight hug? The strangles aren't very strong right now, actually. There's just not enough puts at 50, 50, 15, 50, 10. So we're having a hard time gaining momentum to the downside. But puts are increasing, so we'll see. May is Mental Health Awareness Month, so I'm glad we could all get together. Group therapy. I want one that shows me shoveling money into a fire. Gherk, win free Cornichon. SPX 5000. God damn it, Ben. You ruined my whole thing. Give Ben a shout out, guys, for hooking you up. Thanks, man. Have you ever thought, shouldn't a straddle be called a strangle and vice versa? Strangle the strength like a neck versus straddle it like riding a horse with a leg on each side. It really bothers me. You know, I thought about that once too, and it bothered me, and then I stopped thinking about it. 49.95 nuke. Right now. I'm sure by the time we get down anywhere near there, it'll be lower. Ben equals generous God. Is there any way Reddit can have a good earnings next week? I don't see how. Reddit doesn't make money. Oh shoot, did I just get my first poor gift? No, you didn't. As a matter of fact. That's okay. I'm resulting soon. What? Oh, goody. Another bounce. I'm getting really tired of this shit. Are we stuck here until FOMC, or is positioning coming in? Volume's relatively low. Bulls are trying to keep us from failing 50-20 because if we do, they're fucked. Which is boring, right? Better fucking push this. Jesus goddamn Christ. P25 is an impenetrable fortress. It's moderately annoying. They're shorting vol a bit more aggressively here. Fucking nowhere near turning this shit around, though. They need to get this back above 50.85 to stabilize it. That's only 125 bips away. Yeah, right? The world's grindiest fucking reversal. Hear me out. They admit they were wrong and cut their losses like a proper trader. How dare you? SPX. I've been trading for 3 years now. Win not poor. Have you tried being better at it? Sadly, yes. Is gold bouncing back? Ooh, nice. Wait, didn't Barrick have earnings today? How did they do? Beat on EPS, slight miss on revenue. Oh, that's such a tiny miss. Get your shit together. There's actually a level that matters here. I guess if we break 30. Hmm. It's dangerous because it can just fail again. This isn't below 50.20. I know. Bulls are still pushing. It's just very weak, and I keep getting stuffed by future sellers. You know what? I'll just wait. Hmm. Good enough? No, can still fail. Annoying. 25 test. Let's see how puts are looking. Pretty strong, but if we fail 25, we can test 40. Break 25. 5505, 5510 puts are increasing. Volume's up a bit on those. Neo is the market now. It's been doing pretty good. Six. NQ's picking up a little bit of upside momentum. Fucking test just rejected hard as fuck. We gotta hold 50-25 here. The whole pump's worthless. That's insane. Someone's actually shorting these breakouts, which is weird. Check TM. What do you got? All right. This looks like hot garbage. Yeah, it does. That's super fucking annoying. Bears aren't dead? No. What about SRF? It's up like 4% today. It's nice. Thoughts on the video long, or is she for the streets now? Mm. NVIDIA could still reverse here because it's still above GN. Although, Delta's starting to move just negative, and if it... I think if it loses 820, I'd probably short to the test of GN at 786. Short puts on it are starting to pull back. Could take a little while though. The MM's still slightly supportive here. Less so under 820. CVS joining RAD on the pink sheets? I don't think they're in that dire of a situation. What do you think a realistic high for the day could be before FOMC? It doesn't seem out of the question to test like 50, 35, or 40 and fill the gap at least before end of day. Remember that was where we closed, right? So that's where a lot of the neutral positioning is already. There'll be some effort, I think, I mean, there already is some effort, but there'll be more effort to regain that level. The problem is all the breakouts at 25 keep getting shorted super fucking hard. And the bulls aren't building up any momentum. So you know, like the buy the dip behavior that we get above GN, right? Where like bears will start building momentum, and then the dip gets bought, and then they build momentum, and the dip gets bought, and they build momentum, and the dip gets bought. This is the opposite of that. So bulls are building momentum, and then it gets shorted. They build momentum, and it gets shorted. Well, some things don't change. I bought Go EV at the top. Nice. I'd like to know what top. Because it's traded in a 20-cent range for the past like 5 days. Ooh. Let's check it. ETF FTDs. End of this week, end of next week. I'm scare roused. Nice. NQ's trying to push up through 17.5. Go EV, MOASsing. Ha. Mm. Google's back up. Apple, Amazon. Microsoft. Meta. So all of the Mag 7 are up today. Except for NVIDIA. Awesome. It doesn't seem to matter. It's not fucking doing anything. I made a smoothie with kale. Nice. I just farted in my office accidentally, and the hot girl looked at me. Am I winning? Does she have an office? Can you explain the current strategies you're implementing to prepare yourself for losing to Dork in this week's Quantline Doodle contest? Could be useful info for other losers in the pickle jar. I don't think I'm worried about it. I made a smoothie with kale, but for how long? What? About GoEV Leaps, I can't help it. Have your way with me. She's visiting the neighboring office desk, but now keeps giving me the side eye. Maybe she's into it. Just be upfront. Be like, what do you think about farting? Tell her, of course I farted. I don't smell this way. On the outside. I found the cause of the Infinizoom glitch. Needless to say, it's a tricky bitch. Of course it is, right? Okay, now I know you're lying. ES is on the struggle bus. It's getting into a bit of a better position, but really needs to break like 50-30. And that seems far away still. Dollar is coming down a little bit. Yields aren't so much. NYCB up 30%. Totally normal. All right. It's my birthday today. Nice. Happy birthday, man. Happy birthday to you. Happy birthday to you. Happy birthday, dear Chris. Happy birthday to you. Thanks for singing me happy birthday. No problem. Expecting this to pump prior to FOMC, pretty much, eh? A little bit, yeah. They're gonna try to pump it back to 50-50. I fucking hope so. In 50-15. We did that already. Hmm. Is Snap looking squeezy? It was doing pretty well earlier this week. How's futures trading on WeBull? I don't like it very much. The platform's awkward. I can't figure out how to do bracket orders. And the bid asks are a little bit of a pain in the ass. I think the data's like slightly delayed. Like it doesn't update at the tick level. But the 50% discount on commissions makes it really easy to just like blow money. puts coming in. It still looks weak as fuck. Some. Not a lot of change. NQ looks kind of weak. Might pull back to like, I don't know, 1760. I think this trend's gonna fail. A little bit of delta falling off. So maybe calls being sold to the upside. A lot of the 0 DTE sold puts are at 20. The pump looking like a bull trap? I wouldn't say it's a bull trap necessarily. They're just aggressively trying to buy the dip to keep it from failing. If they stop buying, it'll become a bull trap. Mm. There's very little volume too, and options are super expensive, which isn't helping. Like at the money options are crazy overpriced. My HBM just hit 100% return. Thanks, man. You got it. Nice. Did you already say what the Vana point is today? It's like 49.95 or something. Seems to be NQ correlated pretty heavily. Hmm. I need you to tell me not to sell spreads until after FOMC. Okay, just don't do that. It's easy. Shortfall could get burnt again. We'd have to squeeze out the 20 put, though. I mean, obviously, trying to pump out of this hole is a big risk. 25 puts go back in the money. It could drive enough momentum to squeeze out the 0 DTE 50/20s. Which could push us to 15 and kind of over the gap of like low gamma that's present at 50/20. Ooh. Starting to squeeze some of them out. fuck? All right. Now for packs to do the same. Do they have earnings today? No, tomorrow, right? Tomorrow. A little more volume. Did you get laser eye surgery? No. Anybody want to carpet surf on their knees with me today? I'm trying to drift down the hall into a corner bedroom. No luck yet. Wish me luck. Oh, Squampska's super into that. Nice. Okay. Wait, shit. Did I still have positions open on that? No. 15 test. Probably try to bounce it here, right? Mm. $20 drop in 5 minutes, or 20 bip drop. Hmm. It's getting awfully close to 16. Hmm. Looks like we got a bounce. At least back to a test at 45. Hmm. All right. Oh yeah, sorry. 20. 50 20, 50 50, yes. 17,445 NQ. Looks like it's gonna fail. Can you start streaming like you're an airline pilot? No. Rate cut would likely result in a very short-term bull run, wouldn't it? Maybe. Maybe not. Inflation expectations are already pretty high, and a rate cut would only drive more inflation. It'd probably scare people. Hard to say. Are you looking at Go EV leaps now versus May, June? I have both. Sell 45 short or long 45? Still trying to push the reversal, but holy shit, it's weak. Long 45, short 35. There we go. See if vol breaks up. Is that too close? I should probably be further out of the money on this. 47. Yeah. Will T3 JPEG come 2 p.m. across the entire market? Maybe. Left a gap to the downside. Tricky. Gap fill. Failed to fill the gap. That's interesting. We about to dump? I don't know about that. No. I don't know why we're not pushing for that gap. Weird. There it goes. No. You ready for the 0.25 rate cut today? I mean, do I have 100 grand in the 20-year note? Yeah. Ew, why? Why not? $4.9, baby. Next thing Poopy will be commenting. Oh no, too late. How would the next months look like if we get a hike? More bearish? Possibly. Possibly a lot more bearish. Yeah. Not a rush. Is that it? Hmm. Given that delta, what for? $25 is gonna be still hard to break though. Volatility is going to pick up here a little. It's going to get choppier as we get more illiquid at 25. Why aren't they failing? Because they're pushing hard as fuck. Also, we didn't really run into resistance until we hit 25. Remember no SEP today? Yeah. Yeah. JPL will just talk about awaiting more data, ignoring the signs in the last 2 weeks. Without SEP to point, he won't risk the soapbox alone either way. It's very unlikely that they make any rash decisions without the SEP today. Although the inflation data over the last 2 weeks is pretty fucking scary. Caught a little bit of a bid there. Yeah, dot plot. Summary of economic projections. Wasn't the market circuit breaker? We're far from that happening. Don't worry. One man's scary is another man's extra double scary. I don't know if that's a true statement. Okay, I kind of fucking hate this bounce. Uh, hmm. You know what? I think I just want to short here. Nice. Locked myself into that one. Maybe it's okay. This looks bad. The bounce? Why? Hmm. Is it gonna fail? That is kind of bad. Weak. Remember you talking about treasury squeezing? Those were the days. I was referring to yield squeezing first. Then the treasury squeeze. You're gonna be long TLT when Japan jumps like $1 trillion in US bonds? What would have sold this morning on GoEV? was a very significant breakout. Hmm. Two gaps to the downside now. Hmm. Oh, Gherk, that wouldn't be very Japanese of them. Might not have a choice. Oh, there we go. That's a nice sell-off. Some momentum on this, too. Continuation. Ooh. If we lose 25 again, we can go right back down. Nice. Hmm. DM. Oh shit. Two to 4:30. Going for that second cap. Bull, bear, dangerously sideways. Dangerously sideways unless we break 50-15. In case, in that case, dangerously down. Hmm. Let me see if I can pull something up here for you. Second. Hold on. I'll try to. Sorry, guys. I'm just trying to find something. All right. We slipped 50-15. It's pretty bearish. Hmm. So if it comes back down here, it's probably bearish as fuck. See, break 420 to the upside. Strong reversal. Nvidia straight dead. Me likey. Oh yeah, Nvidia slipped 820. Yes, looks like it's on a precipice. Continuation, but a very slow one. This could very easily bounce back up. A weaker bounce here, though, would be pretty interesting. Like a lower high here would be pretty bearish. But probably mean revert back to 20 and then see if they start shorting the fuck out of vol again. They just got squeezed out of some of their 420s on the drop. But you know, right now they're selling selling the 420, so it's just like back and forth across that strike as they try to lever up the short put position there. Let's pull back to 70 for 75. Let's see if it keeps going. It could be very weak. Three. Well, they're buying a lot of calls. It's not doing them a lot of good. Ivy at 45% at the money on SPX contracts. Wild. It's pretty fun. I love ranges. Thanks to the ES megaphone. Seems increasingly bearish. I better get my fucking fill on this bounce. There we go. Dump it. Hmm. Could be an actual failure here. $24. Vol's picking back up. Should get a continuation. Hmm. Oh. Gap up. Oh, they're trying to gap the 20 strike. Fun. Oh, the bounce just got a little bit stronger. Catch this if the positioning bleeds. Yeah. To go long at the support. It's a little a short 50. I'm not dead yet. A short vol fucked. They're not in the best position. I mean, I wouldn't say they're fucked, but very close to being fucked. Don't forget about the synth long at fucking 5,000, which is constantly just, every time we drop, it's dragging against the price. Another gap? Fuck was that? Alright. Been gone a while, but still lurking when I can. How's that drawing lines to predict other lines and then make money? Pretty much the same as it's always been. How you been, Draxix? Ooh, stopped out. Reject? Hmm. Larry gave signal to order execute order 66. Yeah, but the Bulls just ran headfirst into a brick wall, so we'll see how this works out. The consolidation's a little more bullish this time. They might get the breakout. Pickle by 65. We don't really want to sell a failure, right? So. Hmm. Chop told Daddy Powell. Very wide chop, though, which is nice. Yeah, we got a breakout on MNQ. Not yet on ES. The bullish consolidation. I got a bull flag here, right? Should get the break to the upside of 50.25 off of it. Just for reference, that's a bull flag. Consolidation on ES could break up too. Ooh, rejected though. Another failure. NQ still has some support here, although that failure was really bad. Is that all the gamma gone? Yep. Jesus, 25 is so strong. Alright, let's go fill the gap. Triple top. Let's go fill the gaps to 4,000. It's too soon, Bob. Isn't NVIDIA in a bull flag? I have no idea. No. Hmm. Yeah. Future sellers keep coming into the upside. They're fucked. They gotta try to squeeze out the 25 puts, or some of the 25 puts. I don't even know if they can. There's so fucking many at that strike. Yeah, Delta's falling off. They did get a little gap up there. Mm, is there a level that's actually bullish, though? They're just really long wicks. Maybe that is. Look at all the upside breakouts just get fucking crushed. Must be bullish. Doesn't look like it. Hmm. Alright. I just noticed Beyond on the reg show list. When did it get back on? Like 2 days ago? Or yeah, well, actually, yesterday. Yeah, yesterday was the first day back on. Sorry. Today would be the second. Mm, starting to get volume on the downside move. And NQ. ES hasn't broken down yet, but NQ's been kind of leading the way today anyway. Jesus, violent fucking bounces, man. The shit. Let's do it. What do I need to break here? 17, 465. That should be the push up into ES resistance. Implied vol ticked up 2%. Interesting. What's the bearish case for JPOW? Hawkish pause with no changes to the quantitative tightening. No changes to the balance sheet roll off. Ooh, I made $20 and $2,000 risk. Congratulations. Let's see if they buy a shitload of calls and one more time. Failing 25 and getting a anti-Trump pump incoming this year. I don't think so. I'll put my fucking stops way out of the money. Way too choppy. Vol's turning back up. Make it fail, please. Fix my mistakes. Looks like it is. God fucking damn it. IV almost 50%. It's quite high. The test 95. Hmm. Another breakout stuff. Uh, would you say there's been more stuffing of breakouts today than a Thanksgiving table? Yeah. And yet, no downs. I mean, we've gotten several downs. This one's a bit more resilient. I'm still trying really hard to hold this level. But it's bleeding off all the same. Maybe just try to get their profits off of the bounce before they close the short puts. But the short puts are getting pressured again. Still not enough puts at fucking 20, which is annoying as shit. What did I never fill? If JPOW comes out full bull, where could we end up? 5,100? Sure. I don't know what you mean by that, but yeah, why not? Did Yellen ever come out with a revised GDP? I don't think so. But there'll be another one this month. What's going to happen when treasuries go over 5%? Banks will fail. Seriously. Implied vol moved up again. Off topic, but I just got in the last Beavis and Butthead VHS to complete the collection. 12 tapes to add to the nerd shelf. YouTube doesn't let you spell the latter's name. Ah. Is there even a full bull scenario? I mean... No. They'll have to be... We'll have to be really dumb with quantitative tightening. And reduce the pace of the roll pretty significantly. Would you be more impressed if someone in the pickle jar won a Fields medal or an Olympic medal? Olympic. I assume you aren't trading options today because they're grossly overpriced. Yep. Mm. Still kind of bearish. Shorting vol again. Failed. Is cat in a bear flag? Cat doesn't look good. If cat fails 330, it's probably going to like 300. God, this fucking bleed is so slow. IB's ticked up on 10% on SPX contracts. FOMC day is nuts. Yeah. Yeah, I really don't want any fucking part of it. I still have my straddle from last night, which I almost want to sell at this point. How's KView look? I keep averaging down. More downs? If the market's dumping, yeah, I would imagine so. It's getting kind of close to its bottom. I've been summoned to my home planet by my mentors, Hugh Jerry Zach and Hugh Jerry Balls. When market mean reversion, we're already doing that. God damn it. VIX is almost back at 16. There's the gap fill. Oh, sure. Huh. I hope J-Pow smacks the market. We'll see. Trying to get a foothold again. What time does the info come out? 2 o'clock. Where do the bulls need this? Ideally 50, 60. It depends what time frame you're talking about gap fills. And intraday trading gaps are super important, but outside of that, they don't matter so much. In intraday, I mean, it represents a break in the market maker's hedge, right? And so more than anything, it probably gives you insight into where the market maker needs to hedge, because they had hedged insufficiently or were unable to provide liquidity at that price. Hmm. I kind of want to go long cash VIX. It's tempting. I fucking failed to get support again. Jesus Christ. Just stop trying, you cunts. Is this the Jennifer Powelton waiting room? It's definitely a lot of waiting. What's your favorite Ninja Turtle? Ooh, Michelangelo. The rest of them suck. Chop looks like it was performed with an improperly sharpened $500 knife from Gherk's kitchen. My knives are impeccably sharpened. How dare you? 50, 18, 50, 15, 15, 20, repeat. I think it's time for lunch. Yeah, I kind of feel that way too. What's your favorite zero DTE put contracts? I hate all of them. I knew you were a party dude. Only upside to market being so boring is I'm getting a ton of work done. Excellent. 11 trading days testing these levels. Just pick a direction already. Gosh. Yeah. Donatello's a fucking nerd. I mean, let's be real. What part of the day will Ivy crash? May not crush today. During the speech, if anything. It's 3 DTE, 5,005, 50, 40 strangle. Too ambitious. Probably not. Nunchucks are obviously the coolest weapon of all of them. Yeah, exactly. Second place is Leonardo. But the real goat is Splinter. You know who fucking sucks? Casey? Garbage. Yeah, April too. Yeah, the hockey dude. Shredder is the real OG. Nah. Shredder has like tiny penis energy. Bebop and Rocksteady for the win. We talking Casey Jones? Yeah, we are. He's just like a homeless guy in New York City with a bunch of weapons. He's a LARPer? Yeah. So like a homeless guy in New York City. Jim listening. He said Casey Jones wasn't held enough as a child. Yeah, maybe not enough like skin on skin contact, and he had issues with bonding. Wait, is Casey Jones Canadian? That would explain so much. My 30th was TMNT themed. Secret of the Ooze was better than the original. Yeah, true. You know which other one was dope but doesn't get enough credit? The one where they go back in time to Japan. If you guys didn't know this, The Last Samurai featuring Tom Cruise was a sequel to that movie. A 50-30 call is $1,500. Yep. God, the Bulls really made this downside move painful as fuck. Yeah, another bounce. Yep. What support do we have below 5,000? None. I guess the puts kind of run out around 49.80, but there's really no support down there. $6,800 are only $5. Why is Nvidia down? Besides the fact that it's overvalued. the call interest that came in to support an upside move wasn't substantially strong enough and indexes are dragging on it. You mentioned some FTD starting Friday earlier. Was that for Beyond or GoEV? The ETF FTD period is from like the end of this week into the beginning of next. I mean, well, first the decision comes out, and that's at 2 o'clock, and then you have the presser. We've done this every month for 3 years. I mean, come on. Are you straddling the Fed? I have a straddle that I bought yesterday, although it may be worth more now than it ever will be again. The IV bump's been absurd, especially on the out of the money shit. Not true. Remember that one time? What, when Ryan Cohen didn't show up for earnings? But he made that sick tweet. You slept in? I mean, did I? Hey, Vol's still going up. Ooh. And Delta's still falling off. This is much more fun than the prior tests at this level. Maybe they actually just fucking capitulate here. I know, it's ridiculous. Hmm. Well, if bulls would stop incessantly pushing back on this, we'd already be at 5,000. Get a nice speech ready for when this all burns down. I think you're way too excited about today. What did they do to my boy DVN before earnings? Shorted the fuck out of it. It's pretty dope. Doesn't help that oil's sliding. Volumetric breakdown. Yeah. Hmm. Was this it? I don't know. Maybe. VIX is almost at 16. So I expect they're gonna try hard as fuck to turn it back around. I mean, which they are doing. They're just not succeeding at it anymore. It'd be cool if we fall to 5,000. It gives the Bears a huge advantage going into FOMC. Is it possible to trade your trading button sounds to bullish and bearish moans? What would those sound like? I don't know what moaning bulls sound like. Can you S? But to tune a moo into a murr. Moo for bulls, ah for bears. Mm. I hate Shoreville. They ruin the markets. Can you explain how rolling a position works? You sell the one you have and then get a new one. Or buy the one you have and sell a new one. Yep. God damn it. Hmm. Pumpy's time? Yeah, it would appear that way. Stream card? Literally fire. It's a pretty good one. How many bips were those 3 candles? We bounced 15, 14 BPS off the bottom. All right, give me 1 second. I'll be right back. Still got 30 minutes to go. I'll try to push another leg up on this, or have they kind of maxed it out? They got the breakout on the 15-minute. Not on ES, though. Still no breakout on ES. Which means this is probably weak. Or at least not supported well. What are the tips like on Fubo? There's been a little bit of covering lately, but not very much. Today it got shorted really hard. I wouldn't be surprised if most of the covering done was just in anticipation of earnings to prep for a potential beat. I think my food's here though, so I'm gonna get my food, and then when I get back, we'll do FOMC and all the other shit. So give me a second. Imagine being so dumb you have to pump the entire market all day, every day, just to save your trash positions. This is the world we live in. Yes, still kind of failing to break out on the 15. Or the 5. Oh, 5 and the 15. Might be starting to get one here. Hmm. Gonna try to pump into the Fed meeting and get it back to 30. Hmm. Shorting TLT now chasey? It's a bit risky, yeah. Especially before the Fed meeting. It's pretty good. I was like 75 there. It's just another inside one. SPX is failing the 25 test again. Let me see what Delta looks like. It stopped at. Yep. Ever so slightly bullish. Jesus Christ. Oh, I hate allergies. All right. Looks like another failure of the test. Nope. Support. God, they must be throwing so much fucking money at this. These dip buys are intense. Anything they can do to keep Gamma from popping up? We know it's you buying the dips. It's not me. All right. Hold on. Vanguard not letting me sell options I just bought? Bro. Why the fuck are you trading on Vanguard? Oh, you're back? What food did you get? I just grabbed like a bunch of shit out of my fridge. I have some copper coal. I made a tiny sandwich. I have little breadsticks. Or grissini. Olives. A chocolate sfogliatelle, which I've never had before. That should be interesting. No meatballs. Why would I grab a meatball? That's weird. I think I just have cold meatballs in my fridge. I do, but that's not the point. My wife ate some cold meatballs last night. You keep telling yourself that. Hmm. Do you plan on living long? No. Why would I want to do that? So you can make all the money? That's what my clone's for. I mean, when they invent cloning. The pigeon whales already are in my will. Crypto. What's it say? You'll find out when I die.
How will the probate courts contact us? I've left a very specific set of instructions. Market crash in T-minus 3 minutes. Just kidding. All-time high coming. Thanks for everything, Dad. Love you. Thanks, Jeff. This is pretty good analysis. Are those your clones messaging me in the Discord? No. Those are their clones. They're their own people. I can't control them. Two minutes until nothing. Ooh, futures is going wild. Big pump for no reason. Hold on, I have to read this shit again, alright? Recent indications suggest that economic activity has continued to expand at a solid pace. Job gains have remained strong, and the unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. In recent months, there has been a lack of further progress towards the committee's 2% inflation objective. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. The committee judges that the risks to achieving its employment and inflation goals have moved toward a better balance over the past year. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. Red candle. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency-backed mortgage securities. Beginning in June, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from $60 billion to $25 billion. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at $35 billion. and will reinvest any principal payments in excess of this cap into Treasury securities. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account a wide range of information, including. Sorry, I'm going to sneeze again. Readings on the labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. Say it aloud. A cuck is leading the Federal Reserve. Yep. He just let Yellen put a tiny cage on his penis. One sec. I'm just having a sneezing issue. I'm still here. Why are yields going down? Up, down. Well, the Fed's reducing their pace of roll off. Starting in June. No, they're not. QT's not coming to an end. They're planning on reducing the rate of quantitative tightening. Near term bullish? Not really. They didn't tighten anything. They're trying to keep the 10-year off of 5%. What if I told you the goal of price stability and maximum employment equals no one knows what to do, Dork. The Fed's reducing its monthly balance sheet roll off in June by 25 billion, but the Treasury's only buying back 2 billion a week. That's 8 billion a month. It's very confusing for the bond market. I'm sure Gaff's having a rough day. Hey, Gaff. How do I go about DRSing my T-bills? That's going to be difficult. Have you tried taking them to Japan? Where difference between 8 and 25 go? Someone's got to eat the cum cracker, right? It's gross, but it's the most accurate way of describing this scenario. Who came on it? All the banks, most of the central banks, some of the governments. Mm-mm. So it's like government cheese, but not, but also, yes. Still no point in puts unless below 5,000. Yeah. Was Beyond going to break $7 today and therefore go to 45? That's not how that works at all. I don't know, but I have a feeling everyone's about to get a lot more freaked out when they realize that JPOW is reducing the pace of quantitative tightening into a rising interest, a rising inflation environment, and he has no plan. The Fed's not built to handle this shit. And by this shit, I mean their own mistakes. Built Fed tough. All right, that was awesome. You assume a 2-year retirement window isn't a plan. Fair. He is the father of all of the bulls. He won't let his herd die like that. Yeah, he would. They need to raise rates a lot more than 100 BPS. The markets get to decide. Markets decide ZERP. Let's fucking go free money. The market can't print its own money. Do you see how the Treasury has $500 billion from capital gains taxes? And they may plan to use that to stimulate the economy like they did previously during COVID. First of all, that's not a lot of money. Second of all, they've got way too much debt. Steve Leisman just needs to ask during the presser, Mr. Chairman, how does it feel being the next Arthur Burns? God, I need a press pass. Yes, they can. It's called short volatility products. No, that's a way of multiplying the money that already exists. Thanks, RC's newest bag holder, but I can assure you that I have no twin. You know what I want? I want a Dave Ramsey, Gordon Ramsay crossover where Gordon Ramsay gives the financial advice and Dave Ramsey makes slightly undercooked beef Wellington. Whatever gets you off, DK. Not with that attitude, like that it can't. The market needs to believe in itself. Just like if we believe inflation is going to 2%, it will just go to 2%. But no one believes that. We're stagflating and doing nothing about it. Slightly undercooked beef Wellington. We call that the bird flu special. Rare is how beef Wellington is supposed to be. Medium rare. It's not like black and blue. I watched a video of Gordon Ramsay cupping the testicles of a ram earlier. He was commenting on them being piping hot. Awesome. You can call that show All in the Ramley, a pun on All in the Family. This is a great idea. No, beef Wellington is a calzone. It's not a sandwich. You know, there's already a chart. You guys, I don't know why you need so much help with this. Beef Wellington is not a pie. Because pies are just calzones. Bring out the food cube. I'm going to have to. It's a calzone until someone starts serving from both ends. Then it's sushi. Exactly. What's a chocolate croissant? I told your wife that's between me and her. Is it beef Wellington? Just a fancy hot dog. Would market dump? I don't know, but I gotta find the live stream from the Fed. What a nice shot of a highway. Yep. If you look really closely, you can see Rims and Tims standing there with a sandwich board that says, "I know what you did last summer." Time for Beyond to go to 45. It's not how. Why are you saying that, Dork? You know people are gonna believe you. They shouldn't, but some will. J-Pop needs some cool walking to the stage music. Anything by Bon Jovi would be great. Actually, that would be awesome. McCooler, welcome to Dillionaire. Thank you so much, man. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream. Nope. Because we hold it. My wife just told me you told her the same thing. Are you cheating on my wife with another's wife? It's micro cheating. All right, calm down. What makes the middle of the center of a tenderloin better than just the tenderloin? The Chateaubriand is the front cut of the tenderloin. Ramsey's Boiling Point and Beyond Boiling Point are objectively fantastic TV and are in full on YouTube. Much better than watching J-Pal mutilate the economy. So basically, inflation go burr, bond market go her, Powell go der. Yeah. I will never forgive you. I never asked you to. Oh, I will forever hate you. Sorry. It didn't even cross $7, Dork. You're washed up. Can you still walk out to "We didn't start the fire"? Huh. Let's see about that. I really like where we're at pre-meeting. I get a sneak in that 50-50 test. Yields didn't really move much. They're kind of just where they were 2 days ago. A little higher. By the way, this is why 50/30s were $1,500. I'm entering beyond 45 weeklies as we speak, even though you tried to stop him as fast as possible. Excellent. I couldn't hope for anything more. Hmm.
Good afternoon.
Oh shit, is that a surface?
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past
Did they just make up a new metric to analyze things by?
have weighed on housing and equipment investment.
They did.
Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor
Not the
market
first
remains relatively
time.
tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular. But it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also we look at surveys of workers and, surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that, that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that, that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data, answer to that question. That would include inflation expectations, and all the other data too.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things, but if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts, and those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down to 2%, and another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really it's the same question. I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing, and also, even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way. What we've said is that we need to be more confident, and we've said, my colleagues and I today said, that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
No.
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
Steve.
Yeah, Mr. Chairman, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter? And what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing, we have put the thing under a microscope. I will say nothing is going to come out of that that's going to change the view, I think, that in fact we didn't gain confidence and that it's going to take longer to get that confidence. But confidence, I just think, you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened. I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
No, I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates. And this is a plan we've long had in place to slow, really not in order to, provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
Craig.
Craig Forrest from Bloomberg. 2 questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the
This pump
jobless recovery
seems like
was
way
like.
too much.
Lawyers, accountants.
I mean, 50/80
all
was the
kinds of
upside
highly
target, right?
qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree, it's, nobody likes it, but is there an argument for being patient and working with the economic cycle to get it down over time? Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it'd be appropriate to cut until we were more confident that inflation was moving sustainably at 2%. Our confidence in that didn't increase in the first quarter, and in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's, the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it. And that's how we think about that.
Claire.
Hi, Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It'd be good if you could just confirm whether or not that's a correct reading.
We're still well below delta neutral and gamma neutral. So, yeah, if there was
start mentioning the term stagflation with respect to the US economy, do you or anyone else on the FOMC think this is now a risk?
50-50.
Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your second question was stagflation. I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%, and that won't be. So I don't see the stag or the inflation, actually.
We put a lot of effort into
Michael McKee
dismissing
from
that.
Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up, and of course he's Mr. Potential Growth R star. Do you share that view, and would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023, and we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. I mean, the question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year. And last year, for that matter, too. So I think, in that case, I think you really do have a significant increase in potential output. But you've also got, you've got more supply, but those people also come in, they work, they have jobs, they spend, so you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately, it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point, you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive. And, our evidence for that I went over earlier. You see it in the labor market, you see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years. And that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then
Does
that would
5100
be what it
look?
would take for us to want to increase
Should
rates.
be
We don't see
resistance,
that. We
or
don't see
50
evidence for that. So that's where we are.
Was there discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of restriction. That's part of the policy. That's where the policy discussion was in the meeting.
Yeah, I wanted to follow on the 3%. Is there a time frame of persistent inflation that would trigger a rate hike?
There isn't any rule. You can't look to a rule. These are going to be judgment calls. Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
Victoria.
Hi, Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And, you know, we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between, whether you start in, say, September versus December? And
There's a
difference?
significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is. And you know, we just don't do that. I mean, you can go back and read the transcripts for this is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
Thank you, Chair Powell. Question about the labor market. You've mentioned a few times that the labor market is normalizing. Certainly today's JOLTS data suggested that things are kind of getting back to pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wages peaked, wage increases peaked a couple, 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year, I think, roughly. So, yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Scott. You were Nancy. Nancy, sorry. Hey, Chair Powell, Nancy Marshall-Genzer from Marketplace. You mentioned
guillotines are the
consumers,
answer.
Consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck, and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8, now it's at, anyway, headline peaked at 7.1, now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes, I mean, I think that restrictive monetary policy is doing what it's supposed to do, and it's also, in this case, unusually, working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason why we're having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low. But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer.
Eat the rich, slide it in barbecue sauce. Except you, Gherkin. You're cool.
And so
I'm out.
Confident that it will come.
I'll see you later,
not so
beefy,
confident
cheesy
in the timing
goodness.
of it. But yes, I expect that this will happen.
Thank you so much, man.
Nick Jasinski.
Also,
Thank you,
thanks,
Chair Powell,
Dan.
for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries that are now considering rate cuts is that they're just not having the kind of growth we're having. Their inflation is performing about like ours or maybe a little better, but they're not experiencing the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think, we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation. And so they're navigating this pretty well this time.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You sort of backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy, or is some softening in the labor market and the economy likely needed to bring inflation back down?
So you're right. I think we thought, and most people thought there would have to be probably a significant dislocations somewhere in the economy, perhaps the labor market, to get inflation all the way down from the very high levels it was at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without significant dislocations in the labor market or elsewhere.
And speaking of dislocations in the labor market, in terms of cutting, you said if there were weakness in the job market, that could be a reason to cut rates. So if the unemployment rate were to tick above 4%, but inflation not back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but it'd have to be meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but it would be a broader thing that would suggest that it would be appropriate to consider cutting. And I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III endgame proposal, and you've mentioned that a reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of movement will be made on that front, either a reproposal or a move to finalize?
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all. No decisions have been made. I'll say again, though, if we conclude that reproposal is appropriate, we won't hesitate to insist on that.
And then do you need to resolve issues with the capital proposal in order to advance other parts of the regulatory agenda? Or do you
Bulls have
expect to
built some
continue to
support
make
here.
progress on those other agenda items?
85.
There's no mechanical rule in place there, but I would say that the
70.
The Basel III process.
If we slip
is by far the
70
most
back to
important thing and
60,
really is,
maybe
I think,
50.
occupying us at this time in terms of what we're moving ahead with.
Let's go to Mark for the last question.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around the country where they have their own economic staff, not the people who work here at the board. They're different people, and and so each reserve
Do you
bank
think
has
this
its
breaks
own
down?
culture around
Probably
monetary
not
policy, its own
substantially,
approach,
but we
and that kind of
could
thing.
we could break
It
down like
guarantees
20,
you
30
a
bucks.
diversity of perspectives. So I think
It
the
depends a lot
perspectives are
on
very
profit
diverse.
taking.
But and in terms of dissents,
yeah,
I
think it's going to depend a lot on profits.
we have dissents.
We're still below gamma
and,
neutral,
a
delta
thoughtful
neutral, right?
dissent is a good thing. If someone really makes you think, that kind of thing. But
So sell-offs
all I can say from my standpoint
still
is
gonna have
I listen carefully to people. I try to
that could
incorporate
carry over.
their thinking, or do everything I can to incorporate their thinking into what we're doing. And I think many people, if they feel that's happening, that for most people, most of the time, that'll be enough. But I'm not. It's not frowned upon or illegal or against the rules or anything like that. It just is the way things come out.
This
And
breakout's very weak.
I mean, I think we have a very diverse group around the people. Frankly, more diverse than it used to be in many dimensions. More diverse from the obvious, gender and demographic ways. But also we have more people who are not PhD economists. So we have people from business and law and academia and things like that. So I think you actually do have quite a good diverse perspective. I think all of us read these stories about a lack of diversity, and we look around the room and say, I don't understand. I really don't understand what they're talking about. So, but I get the question, though. Thank you very much.
Losing 85 could solve a bit. Wow, that was fucking nothing. That sucked. Oh shit. That's a start. Found support at 75. Downside continuation from here? Probably not. 75 is still fairly supportive. More inflation for longer. Yep, that's how we're rolling. I think the biggest question on this is going to be how much of this was just rescuing positioning versus how much of this is creating stable upside. And I think the answer to that is a lot of positioning rescue. Mechanically, we're still in a very bad spot. I don't think Powell said anything that was extremely encouraging. We are seeing a bit of a drop down in the 2 and 5 year, which is pertinent, and the 10, as far as leverage is concerned. And this may give way to a more sustainable upside over the next couple of weeks, but I think inflation's going to remain pretty hot, and the Fed's just simply not addressing that at this time. $70 should be a bit of support. Test 700. Sell the 705. Hmm. $70 should be mildly supportive. We'll see how that goes. Oops. I'm not really want to go short there. Hmm. Should get a little bit of momentum. They're shorting the vol into it. Resistance at 95. I don't think 90 really presents any significant resistance. So I'm gonna go along the 50. It's 2 failures now. A little bit more bearish if NQ fails to break out here, and this second attempt at breaking the trend fails as well. There's a bit of a problem with liquidity to the upside of 85. This is why, like, 80 was the price target earlier. There just wasn't a lot of 50-80 was the upside price target, because there just really wasn't a lot of there really wasn't a lot of calls outside of that range. I remember only 32 minutes left though. Yeah, I know. It could change, don't get me wrong. We could definitely in the last like 15 minutes push up above 5100 if there's enough call buying, which there very well could be. Going to go short the 15. Risky. Maybe just short 20. See if it bounces back. Short 20. Stop at 30. Vol's turning up a little bit. They're crashing the market to short beyond. The Fed can neither raise nor lower rates. I mean, yeah, their indecision has trapped them. They're in a very bad spot to do either one, right? Either one is going to lead to bank failures. It's just the degree of bank failures. I still think obviously raising rates would be more beneficial, but that doesn't mean the Fed has any intention of doing that. Because it would require they shock the markets, which, you know, is almost as bad as failing banks. Okay. Remember, 70's supportive. Ooh. Gonna lose the 70. That's interesting. Okay, that opens up a bigger move down. Let's fall a little bit more, but it's definitely substantial. Nice. Who was the person talking shit on my $400 drawdown? Fuck you, nerd. So when the 3 and 6 month auctions start moving above 5.5%, I don't feel like anyone will want to hold Yellen's bags if all she's doing is rolling over the entire treasury balance. Well, they pulled back a little bit today because people aren't really sure how they're going to manage the buybacks, right? But how they manage the buybacks is going to probably make a substantial difference in what happens with the short-term treasuries, which they are going to continue to keep very liquid, right? What at 49.50? Hold up. He says GoEV is going to 49.50. God damn it, Dork. It's either going to $4 or 500, okay? There's no... I really should have shorted that. Whoops. God damn it. Why does it keep... Whatever. Starting to get an awful lot of stability at the 60 strike. Still have about $10 more range to the downside. So we could still test 50. Watch for that, like, that support right there in the orange. No, that's next week. I'm talking SVX today. We've got 24 minutes, man. Gotta try to reverse this at some point, right? Holy fuck, a lot of Delta fell off. I bought a straddle a few minutes ago. It's up $400 net. Careful. You do not want it closing worthless. Oh shit. We're right back to the middle. Interesting. If we slip here, I feel like that's very, very bad. Oh, you bitch. Still made money on it, but fucking stupid. Give me your knives. Well, son of a bitch. That's just fucking selling off like crazy. Huh. That's a wick on the 4-hour? Yeah. This is fucking fun. SPX ends flat today, as was prophesized. Where it begins, so it must end, crypto. I don't know if I want to play a reversal if we lose 40 here. Huh. God, this is just getting pounded. All right. Booth machine broken. Why sell off? Lots of zero DTEs started taking profits and forgot that there were hundreds of thousands of puts on the chain. That's all I got. Okay, there's a little more support. I think this could have a reversal back to 50. That seems reasonable. Trading futures without bracket orders is like speed racing. Thank God I have a gaming mouse. Is this bullish? The bounce? Could be. We'll see. Let me think. If we get back over 50, I don't really know getting back over 50 helps us. Bulls are trying to turn the delta around a bit, but I'm not sure that's working out for them. Very, very slippery under 50. I've averaged making 2x my job salary and trading over the last 6 days. All 6 days were green. Thank you for driving home risk management as I sit here trying to blow up a futures account. No problem, man. Big support on NQ there. ES also. It's a little higher. Coming in at 1746 versus 1740. Might not be enough. Oh shit. Hmm. Went from negative 400 to plus 500 in 2 hours on minis. Animals. Don't worry, I'm gonna go right back to zero here in a second. I sold ADCs before JPOW talked and somehow made money today. Am I a pro? No. No, you're not. Oh, this is fucking done. This is very aggressive. What a crazy day. It's like no matter how badly you played today, you were rewarded because institutional finance played it worse. Huh. There goes 25. What a rug pull. Son of a bitch. Yes, back to 50-50. How many FinTwitters kicking and screaming right now? They all went long during the Powell speech. Yes, it's still selling off a bit here. Hmm. Mm. Hmm. 50-17. Small reversal, maybe? I don't know. SPX isn't moving at all. Is it broken? What the fuck is going on? Oh yeah, the market closed. Ding ding. I didn't even notice. Holy shit. What a reversal. That was so fun. A little bit of covering on Beyond into the end of the day. Managed to hold 2% despite all the crazy shit going on in the market. GoEV started to see a little bit of covering towards the end of the day as well. This is now moving to its 30th day on Reg Show. Still very illiquid. Maybe not illiquid enough, but very illiquid. Let's see. Anything notable with those? Not really. I mean, Powell's speech was kind of as expected, right? Really no guidance, no information, nothing, right? They're not going to do anything because they can't raise rates and they can't cut them. They did announce that they're going to begin tapering the roll-off in their balance sheet starting in June. And the Treasury will also be buying or buying back. I think they're going to focus on the bills for now, but about $2 billion a week. I will say that the Treasury's buying is not equivalent to the reduction in the roll-off. So, I mean, I don't really think much changes. We're probably going to see 3-month to 2-year bills move a bit up. I don't see any path for the Fed cutting rates for this year. I think. You mean it's 4 times less? Well, okay, fine. It's not sufficient or equivalent. QCOM earnings, revenue 940 billion. Okay, so they beat. So it looks like GDP estimates are way below where they should be, right? I mean, we're seeing mega cap tech just beat on EPS all over the place. So Yellen's right. GDP will probably be revised. Inflation will still be hot, but so will growth. None of this is good for inflation expectations. This is, I mean, that's what we're funding, right? We're funding inflation. At the cost of our debt to GDP ratio. Bears used their advantage. Yes, they did. Pretty aggressively after the call positioning started selling off, reversing all of the day's gains, and closing the day out at 50.1840. Pretty impressive. Not gonna lie. I definitely thought bulls would have fought back a little harder to hold the 50 level, and they did not. And what we may be seeing as part of this drive down is the de-risking of short puts. Short vol is becoming extremely risky, right? I know we ended today with cash VIX lower than we started it, but they may be trying to get rid of that short vol positioning. Margin, all day bear steepener. God damn it. I don't think margin's going to get into a better place. And with the haircuts that happened today, also, it's going to be difficult to even achieve the same levels of leverage that we saw previously. Especially on our way up in November and stuff. And then sustaining the positioning that drove us up there, also going to be very difficult. So as we see that short vol kind of pulled back, I expect we'll see more and more of it. Things will become inherently more bearish. And volatility will loosen up. It's been constrained for far too long. This is how that looks on ES. Broke back up into the trend and then failed the test of 51.26. Commodities down for the second day in a row. This is largely due to China, but they are declining, and that's hurt some of the things we're watching, like gold, coal, energy. Oil fell back under 80 again today for the first time in quite some time. If that persists, it could cool down inflation in a few months, but we'll see if it persists. Mostly though today, dollar doing pretty well, or at least holding up pretty well, and yields fairly stable. I mean, even with the buyback from the Treasury and the decision by the Fed to trim back QT a bit. Yeah, Powell announced a reduction in QT starting in June. It's really not impacting yields at all, right? Correlation obviously turning around very sharply on the 1 and 3 month, dispersion breaking down across the indexes. Forward yield to volatility still negative, although it did spend a good part of today positive. It is now negative again. The carry trade got levered up pretty hard into close there, probably in an effort to maintain margin requirements on the short vol position into the end of the day after we failed. Move, I don't think is updated yet. Skew, we're still seeing quite a lot of demand for tail risk hedges, and this is now, yep, nope, almost equivalent to last week. So, we discussed earlier this week that over the course of the week, we could see that positive correlation return as the volatility shorting kind of capped out. And we're starting to see that. So we're starting to see VIX and VIX futures move back more in line with each other. If a probable like JPA is trying to doubt, isn't that really bearish? I mean, he's not doubting so much as that he knows exactly what the fuck is going on and can't do anything about it. Today was messy, Dork. But we're now pricing in one rate cut again. Barely, but just one. I liked how that one guy asked about rate hikes. That seemed new. I like how the one chick asked about stagflation, and JPAT was like, "Ha, what? Stagflation? What stag? Who? I don't know what you're talking about. How did that, what? Where did you get that from? Let's not use that word. I don't see a stag or a flation." What a fucking dipshit. That was the most off guard I've ever seen JPAL caught. Like, he's usually so on point with his meandering bullshit answers where he says nothing. Is the stag in the room with us right now? Clear throat? What clear throat did you say? He was silent for like 5 seconds before fumbling through it. He got stagged. He coughed over his own words the whole time. Maybe he's ill. He's caught H5N1 from eating lonely steaks at Ruby Tuesdays in Chicago O'Hare Airport. I like how he was like 10% unemployment and 6% inflation is stagflation. Yeah, but why don't we try removing all of the gig economy workers from the unemployment report, and then we'll use the old Fed method for determining inflation. Then we've got inflation at 20% and unemployment at like 9%. I mean, if we're gonna use the same definition of stagflation, we should use the same econometric models to determine if we're in stagflation or not. Shush! I will not. I won't stand for it, Dork. Don't say the quiet part out loud. We don't use just brand new econometric models and be like, this isn't the same as back then, when it's exactly the fucking same. Why don't we just stop reporting inflation and call it a day? I don't know, man. Anyway, I'll have Pickles picks out tonight. We should be able to dive into a few more equities now that everything's settled and we kind of know what the Treasury and the Fed are doing. So that'll open up some fun stuff, especially with dispersion breaking down as rapidly as it is. Lots of opportunities. Paradigms and better assets and AI. Horse apples. Thanks, guys. All right. I'll see everybody bright and early tomorrow. Have a good night.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours?
No,
My mother said she found it in your closet.
I don't know. One of the guys must
have what?
Look, Dad, it's not.
Where did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have